If you want to be successful, find out what the price is and then pay it. Scott Adam. The price here is 10 to 15 minutes a day, every single day the market is open, tracking it with us. We've been calling you to do this with us for years now, and those of you who have listened, you are reaping your rewards with successful practice trades. And folks, don't forget, there is always a bull trap, and it will be coming. For those of you who missed your jumping in points for the down move and are now worried about catching a falling knife, don't worry. There are always trading opportunities. We'll wait. The market will bottom. It will make a false bottom called the bull trap. If you haven't watched our Corona investing video, I want you to do it. I'm attaching it into the show notes today. Again, to receive all of our training, go to chartingwealth.com. Subscribe. We'll get it to you every day. What we do here is free. All you have to do is spend 10 to 15 minutes a day charting these markets. Now, stocks down big, gold down a little bit, bonds up big. So how many of you jumped in to the practice trade, the down move in gold? Did you go buy puts? Did you go buy virtual puts to practice trade that? I hope you did, because it would have worked rather nice for you. Gold down not a whole lot, 1.14%, but continue to watch things. Stocks, oh gosh, the bleeding continues. But for those who are in short funds, you are loving it. PSQ and SH up substantially for the day as the underlying indexes are down, and bonds up again 6.48%. Let's jump into these charts. We'll first go with the weekly. On the S&P 500, starting out another strong down week of forming. Big candle, not a whole big wick on the bottom, but it did plumb substantially lower than last week as far as candle body itself, and the candle wick down lower. Not like we saw the week before, though. We're just starting out. Have a lot of room to sink. Price percent oscillator cranking at an even greater angle. Derivative oscillator gaining downward momentum. Let's go to the 2-day candle. Now remember that 2-day candle rotated over going down back on this, setting all this up back on the 21st of February. And of course, we then had that followed by the weekly vertical crossover going down, then slid sideways for about 2 weeks, going on 3 weeks, and then the big crank started. So there wasn't a warning here, folks. We saw it. We talked about it every day, didn't we? Now, let's look at that 4-hour chart. Where was that last possibility for you to jump in on the down move? Well, it was that 4-hour chart crossing over, going down back on the 6th. That was Friday the 6th. And of course, we saw the jumping in point could have been in the morning on the 9th. That 2-hour chart gave you, as you guys recall, that's really where, and in fact, I'm getting my days confused. Jumping in point, that 2-hour chart was back on the 6th. It was in the afternoon after that crossover in the morning on the 9th. And then what did things do? They do what they do a lot. They slid sideways as the market sort of consolidated, and then the drops started. And again, it's been bloody. It has been brutal, but it will probably, my friends, continue. And again, we'll wait for a bottom to form, and when that bottom forms, we'll watch it, we'll see how it goes, and then when the charts tell us, we'll jump back into a down move, or maybe there'll be enough good news about the coronavirus that it'll drive the market up for a while. That, my friends, is called the bull trap. It will be happening. Watch Corona investing. It's gonna happen. It's just market psychology. It is that simple, my friends. It is human nature. Now, and I want you to know what a bull trap is. In fact, I might just do a video on the bull trap, but the Corona investing video tells you enough about it. Now, let's leave the S&P 500. No jumping in point today for that. It's just still down hard. What about QQQ? That is the Nasdaq 100, down the most, almost 12%. to start the week off. I was so hoping that up move from Friday would translate over a little longer to give more people the ability to actually jump into the rollover, but you had to get in earlier. So what do we see? Going to our fourth week of super strong down movement. Price percent oscillator cranking down, derivative oscillator gaining downward momentum, huge candle forming, lower lows, bigger candle. Go to the 2-day. We see it also dropping off at an even greater angle. Price percent oscillator gaining a little bit of energy. And again, candle forming, big wick on the bottom. That is the latest 2-day candle. And again, price well below the 2-day, well below the weekly. We go to the 4-hour. And of course, down in the morning, further down in the afternoon, maybe a little bit of hope. We got a little bit of wick on top of that, showing a little bit of weakness, but it did the same before on Thursday. And then sort of sideways and then took that roll over. Let's see what the 2-day chart did, because it tried to pop over. It did, popped over, then of course hammered down in the morning, tried to pop it. It's getting sloppy now. We don't like to see that. So again, the reason you guys ask why we stick with the 4-hour, because it's less sloppy, it's cleaner, doesn't give you as many jumping in points, but it also doesn't give you as many false signals. That's why we use the charts we use, because time and time again, my friends, they work for us. That's where we are on stocks, just hammering down, waiting for the bleeding to stop, hopefully before the patient dies. Now, we leave stocks, go to bonds, TLT. What do we see the week starting off like? A red open box spinning top. Look at the prior weeks. 1, 2, and 3. The 3 prior weeks, beautiful. Now we have things really starting off with weakness, but the good news is that price percent oscillator is spiking up. Derivative oscillator, our leading indicator, continuing to lose energy, but the lagging indicator is really smashing up. But again, pay attention. Price is still above the weekly, but that is a weak signal as far as the candlestick goes. Now get a little more information going to the 2-day. See that? We've pulled back. We're sitting right there on the 2-day trend line, but 2 days of solid red spinning tops. Now remember, solid red versus open box red. Open box candles show us up movement. When we see a red open box candle, it's a slow down in the up movement. When we see a green open box candle, strong up movement. Then the red down candles are showing us again those areas are of strong down movement. The wicks on top show us some weakness in the down movement. That's where we get the indecision from. So laying right there on it, price percent oscillator is driving up, which is good. Derivative oscillator losing momentum. So pay attention. We're still positive. 2-day is still available for an up move. So is the weekly. And we look at the 4-hour, hasn't crossed for us yet. So keep your eye on the prize. You have that crossover going up. Might give you a jumping in point. This 4-hour chart has been decent of late. I mean, it's working well. Doesn't mean it'll always work well, but keep your eye on it. If you have a crossover, then you can potentially jump into a practice trade going up. Let's watch, see how bonds continue to hold up. So we go from bonds, lastly to gold. Who's keeping gold down? Is gold being kept down so that it's not a place where people want to stick all their money from the stock market? Don't you find it interesting, my friends? Why is gold down? Well, it is, and we told you it was going to be, didn't we? We had that weekly vertical crossover going down on Friday. Now, again, if you were in gold, of course, you don't want to be in it when you see that happening on a Friday. You want to clear that practice position. And if you've taken our options training course, you wanted to practice trade an option on gold, that'd have been the time to do it, wouldn't it? Hopefully, you might have practice traded a put. I'd like to know how that worked for you guys with all this volatility. Volatility is interesting when you see how it works. That's why I want you to practice trade these kind of things. And again, a great place to practice trade. How many of you guys are subscribers to TC2000? We have a discount coupon, $25 off. all sorts of great paper trading that you can do there at TC2000 once you become a subscriber, and it's only a few dollars a month. It is a great way for you to actually see how that trade would go in the market, as close as you're going to get with practice trading. It's wonderful. I'd really, really encourage that if you're serious. Now that's where we are on the weekly. Heading down, let's go from the weekly to the 2-day. And again, look at that 2-day. Big, big down candle with a long wick on the bottom. Price percent oscillator heading down, spiking down. Derivative oscillator gaining downward momentum. Exactly what we would expect to see. What about that 4-hour chart? This is interesting, the way we ended the day. Again, solid green is again down movement, but what I call a slowdown in the go down. It's a little bit of a pullback there, but big down morning. Lost some of that in the afternoon, so pay attention to that. Price percent oscillator lost a little bit of its downward momentum. It's still hammering down. Derivative oscillator backed off a little bit at the end of the day. So keep your eye on things. These markets are exciting, if anything else. They are so exciting. And again, take that Corona investing special training that we put out this last week. I'll put a link to it here today. Really want you to watch that. I want you to pay close attention to the 1929 crash. It mimics other crashes along with that entire psychology of the run-up, the blow-off, and the crash. I want you to see that psychology. We are in denial right now. People cannot believe that they've lost all the money they've lost. But remember, for most everybody that's in the market, it wasn't a real loss. It was paper. You never have money in your pocket until you close your trade. So you can cry and whine all you want. It wasn't yours. You didn't claim it. So let's continue to watch these markets. Let's continue to practice trade. Let's continue to learn. Let's continue to have fun. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.